If you work in the insurance industry, you'll no doubt be familiar with the idea of creating a single view of the customer. Indeed, it's a notion that's been around for at least a couple of decades, and as such the benefits are pretty well understood. So why would we want to revisit this discussion today? Well, for a couple of reasons. Firstly, while organisations have made some pretty good progress in some areas, things are generally far from perfect. Most insurance companies, in fact, continue to suffer from fragmented systems and data. Secondly, we have the rise of digital, which is shifting the balance of power between buyers and sellers and accentuating the impacts of data fragmentation issues that exist. Creating that single unified view of the customer has therefore become even more critical than it has ever been in the past. Over the next few minutes, we're therefore going to be discussing the practicalities of creating a customer-centric business in an increasingly digital world. Along the way, we'll be looking at how advances in technology, particularly in the area of master data management, are allowing traditional data integration challenges to be tackled in a much more efficient and effective manner. But let's first step back and look at what we mean by creating a single unified customer view. Firstly, it's about understanding the customer as an individual, which is primarily about pulling together demographics with information on preferences, attitudes, lifestyle, and so on. To complete the view, we then need to gather together everything we know about our dealings with that customer. This includes the products they've bought and all interactions we've had with them over the course of the relationship. Armed with such a complete and consistent view, both sales and customer service staff can do their jobs much more effectively. In a digital world, though, it's not just about giving your sales staff the information they need to sell, it's also about giving the customer the information they need to buy. Going forward, the single view therefore needs to work in both directions. A customer interacting online, for example, will want the same kind of single view across all of their policies, plans, investments and proposals as your call center agent would. And just like you want to interact with the customer as a single entity rather than a collection of policies and transactions, they want to interact with you as a single entity too, rather than as a collection of departments, advisors, agents and channels that are all apparently acting independently. So what do we need in place to allow this to happen? Well, we obviously need to source data from internal systems, cloud services in use within the business, and pull this together with relevant feeds and reference data from third-party sources. The problem in most organizations today, though, is that when you source information from multiple systems, you don't end up with a single coherent view. The result is typically multiple conflicting views. The traditional approach to solving this problem has been to extract data from each system individually, clean it, collate it, resolve discrepancies, and then put it into a data warehouse. It's the kind of approach that serves periodic business intelligence and analytics requirements really well. The problem is, though, that processing data in this way takes time, which means that the view of the business always lags behind current reality by days, weeks, or even months. This is obviously no good in the operational context. Whether we're talking about interaction via a call center agent, a website, or a mobile application, the view of the customer needs to be current as well as complete. But this is where modern technology can help. Advances in master data management solutions, for example, allow a much more active and continuous approach to data integration to be implemented. The big difference on this chart compared to the traditional approach is that you'll notice that many of the arrows are two-way. This reflects the fact that an active MDM approach incorporates an element of synchronization. The idea is to ensure that all copies of customer data remain consistent as changes are made within individual systems. As indicated on the bottom of this chart, solutions in this space also allow you to visualize your single unified view. As importantly, though, the synchronization approach together with use of data mapping techniques allows you to visualize your single view pretty much within any application. You can even drill through from one application to another on the fly to get additional details that may be held in another system, obviously with full controls in place to manage security and access. Zooming out, this more active approach to data integration allows us to create a more continuous optimization cycle. Principles, rules and guidelines generated from business intelligence and analytics activity can be brought together with customer and transaction data to tune or even automate what goes on at the front end of the business. This includes activity taking place in the call center, via the channel, over the web, or even through customer-facing mobile apps. As the business continues to operate, results in further intelligence can be fed back into the analytics process, and so the optimization cycle continues. This kind of continuous and agile approach to automation and optimization is essential for success in a digital context. Whether it's competitive activity or customer behavior, you must be able to detect and respond to changes in the market very quickly. Consider for a moment the prospect of large online retailers and other service providers entering the insurance marketplace, already armed with a huge amount of customer insight from their existing business activities. It's going to be very hard to protect against this kind of threat without you yourself also having intimate knowledge of the customer. But it's not just about thinking defensively. The data integration opportunity is much broader than this, with the potential to add value across many areas of the business. Generating a more holistic view of the customer can help you understand points of leverage, which is critical for assessing options and prioritizing in a strategy and planning context. Performance can then be enhanced across sales and marketing and channel management, as a greater understanding of product and customer affinity and the effective use of incentives can lead to much greater cross-selling and upselling potential. Enhanced operational efficiency in areas such as customer services and claims handling can then both reduce costs and boost customer satisfaction. Comprehensive and up-to-date visibility is then fundamental in a risk and compliance context, and even product development can be enhanced through better customer insights and a kind of continuous and rapid feedback mechanisms we described earlier on. To summarize the benefits, we end up with a greater share of the customer's wallet, increased loyalty and retention, lower cost of sales and service, more effective fraud detection, and easier regulatory compliance, all of which translates to increased profits and reduced risks. If this all sounds interesting and you'd like to know more, you'll be glad to hear that we've produced a paper that discusses the ground we've covered in a more detailed manner. It's entitled Insurance Through the Looking Glass and has been produced in association with our sponsor Visionware. If you'd like to get hold of your copy, you can download it free of charge from either the Freeform Dynamics or Visionware websites. In the meantime, thanks for listening, and we wish you luck with your own data integration initiatives.